In November 2022, the world witnessed something almost unbelievable. A company once valued at $32 billion collapsed in just 72 hours. Investors were wiped out and customers were left broken. Celebrities were sued. And a young billionaire once called the future of finance became the center of one of the biggest financial scandals in modern history. But this isn't just a story about crypto. It's a story about trust, power, and deception. It's about how one man built an empire that looked unbreakable, till it wasn't. This is the rise and fall of FTX, and the strange genius behind it, Sam Bankman-Fried. Before FTX became a global name, there was Sam, a quiet, awkward kid with messy hair and a brain built for math. He was the kind of person no one expected to see in headlines. But Sam had something rare, an unnatural ability to see patterns and exploit tiny market inefficiencies. He could turn those small opportunities into massive profits. He graduated from MIT and worked at a well-known trading firm. There, he discovered something shocking. Crypto markets were wildly inefficient. Using simple math, he saw profit opportunities every single second. Within months, he created his first company, Alameda Research. People quickly noticed his intelligence and speed. They admired his aggressive trading strategies and his unusual philosophy called effective altruism. He claimed that making billions wasn't about wealth, but about saving the world. To investors, this made him seem not only smart, but trustworthy. He became the good guy billionaire, the one people felt safe trusting with their money. And that image changed everything. In 2019, Sam launched FTX, a crypto exchange built for traders, by traders, and within months, it exploded in popularity. FTX grew fast because Sam gave people exactly what they wanted: powerful trading tools and lightning-fast execution. He also gave them something rare in crypto: the image of honesty and transparency. The media loved him, politicians welcomed him, and celebrities partnered with him. Investors practically worshipped him. He drove an old Toyota, slept on beanbags, and wore cargo shorts to billion-dollar meetings. To the world, he was the anti-billionaire billionaire. People believed he didn't care about money and would never commit fraud. That belief became the foundation on which FTX was built. FTX became massive, with billboards in Times Square and stadium naming rights. Even Tom Brady appeared in their commercials. Sam Bankman-Fried became crypto's Einstein, and FTX became one of the fastest-growing companies in history. But behind the scenes, something darker was unfolding. The clean, trustworthy image hid a secret link no one could see. FTX wasn't truly independent. It was deeply connected to Alameda Research. And billions were quietly moving between the two. These transfers were hidden from customers, regulators, and even many employees. Money was being moved quietly, illegally, and without permission. Billions of dollars in customer deposits were funneled into Alameda. The funds were used for risky trades, political donations, lavish real estate, and unknown investments. But the world didn't know any of this. Not yet. Sam created the perfect illusion: a clean exchange and a separate trading firm. In reality, FTX and Alameda were tied together like two wires waiting to spark. And that spark was coming fast. It started with a single article. A report revealed that Alameda's balance sheet was filled with billions of dollars in FTX's own token, FTT. Investors panicked and rivals reacted. Then came the tweet heard around the world. CZ, the CEO of Binance, announced he was selling all of his FTT tokens. Markets tanked and confidence evaporated. Withdrawals surged instantly. People rushed to get their money out of FTX. And for the first time, FTX couldn't pay them back. Billions were missing, and the empire began to crack. Sam couldn't stop the bleeding. Inside FTX headquarters, chaos exploded. Employees fled, data vanished, and regulators closed in. The truth finally came out. More than $10 billion in customer funds had been misused. Not hacked, not misplaced, misused. The money had been poured into risky bets, political influence, and luxury properties in the Bahamas. FTX wasn't the victim, it was the house of cards. Within days, FTX filed for bankruptcy, and Sam resigned as CEO. The crypto genius became the face of one of the biggest financial scandals since 2008. The world watched in disbelief and confusion. How could someone so trusted create so much destruction? Some blamed arrogance and others blamed greed. Many believed it was the inevitable result of an unregulated industry. But one thing is certain, FTX wasn't just a failure. It was a warning to the entire financial world. A reminder that even the smartest people can build the most dangerous lies. And sometimes, the people we trust the most are the ones we should have questioned from the very beginning.